Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is January 26, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's look at current market trend and our strategy. US stock market trend is still in the uptrend, and the uptrend is gaining steam. China's stock market is still in the uptrend, but it may correct in short term. My plan, currently I have sold all the China related ETFs and bought MIDU, which is a US mid-cap ETF. I continue I continue long the market through the strong fundamental stocks. I may sell or reduce position in stocks if they are about to report earning, or sometimes I will replace the stock with the options. Uh, let's take a look at the index charts. The first is the Nasdaq. Nasdaq is in the uptrend despite the heavy selling by Apple. The index is still going up, but we have some distribution days. Look at the red bar. Those are the volume of the days when market was going down. That's a institution distribution. SP 400 mid-cap index. This index is very strong. It broke out above the two-year peak, two-year high, and it's going up right now. SP 500 large cap index is also broke above the two-year high, it's going up. SSEC, this is a Shanghai Stock Exchange Composite weekly chart. It reversed the previous downtrend. Currently, it's in the uptrend. However, if you take a look at the daily chart, last Thursday, China time, it had a one-day reversal. It reached a high, could not hold, and came down. That is a distribution. That means the big money is selling into the strength, and the index may suffer pullback in short term. FXI weekly chart is in the uptrend. FXI daily chart, take a look. This recent peak is lower than the previous peak, so that's not very bullish. It's a bearish sign. So China market may subject to short-term pullback. TAO is a Shanghai, mostly Shanghai real estate ETF. Weekly chart is in the uptrend. Daily chart is still in the uptrend. GLD is in a downtrend. Look at this peak. You connect the peak together, it's going down. That's a downtrend chart. SLV is also in a downtrend. You connect all the peak together, it's going down. I'd like to share with you about one sector, sector watch. This sector is a biotech. US is ahead of other countries in the new medicine development. However, investing in biotech is very tricky. It's a make it or break it model. If you invest in a company, if the company end up being their drug end up being approved by FDA, the stock can gap up very large, very quickly. Or if the FDA reject its drug, the stock can gap down. So it's a make it or break it model. Buying stock is risky. If you know the date, the FDA approval date, or the date when the company released a major data, and if you know those dates, you can buy option before it happens. You can buy a call option, put option, and or call or both. You can buy both call and put. And those are my primary way of investing in biotech stocks. Currently, there are three big companies in the biotech sector very strong: Celgene, Gilead Sciences, and ALKS. There are two small companies on my watch list: SRPT, DNDN. SRPT has a very big drug. It's in a phase 2 trial, and phase 2 trial data is very good. But it's risky to invest in those kind of companies. ALKS has broken out this here, breaking out the base, and it's going up right now. Celgene broke out on the $82.80. It's a very strong breakout. Volume was high, and stock went up a lot. However, it's if it can break out again, if we can break out 122, the previous high, it will be another add-on point, second opportunity to buy. Dendron, DNDN, it seems like it's bottom out and it's going up. It's being accumulated by institution from the chart. Gilead Science also have several drugs in the pipeline. It's a strong company and it's going up. It's in the uptrend. SRPT has a very big drug in the pipeline. It's in a second stage, phase two trial, and data was really good. Anticipate this year, it is anticipated SRPT will have phase 3 data released, so that may lift the stock shares. And right now, seems like Friday it has a spike in volume and price. It seems like someone bought it. The big money has bought this stock. Those are the stocks I previously shared with you, but now they are all beyond the buy range. What is a buy range? I previously shared with you. When the stock break out from a base, that pivotal point is a buy point. If it's within the 5% of the pivotal point, you can buy. If it's above 5%, it is too extended. ARM Holdings is too extended. And the 3D printing companies, DDD, SSYS, and PRLB, all too extended. LinkedIn had been within the buy range for 2 weeks, but last week it went up, so it's beyond the buy range. It's too extended. SodaStream, SODA, those are beyond the buy range. If you already bought, and those stocks hasn't shown any distribution sign yet, so you can continue to hold. But if you haven't bought it yet, it's too late. These two companies I previously shared with you, but they triggered a stop. If you buy a stock, if fall below 8% below your purchasing price, that would be a stop. You have to sell. Nation Star Mortgage, NSM, and fell below, and WAC also fell below. And the Apple is a stock we should all avoid. Apple was heavily held by institution, but now they're being sold by institution. So there's no way individual investor should hold on to Apple. It's in deep trouble right now, the stock. And Netflix has bottomed. Netflix fell from $300 to $50, and this year it has been accumulated by institution. Right now it's $160, and this stock is in the uptrend. I like to share with you about two stocks that's near the breakout buy point. One is a lumber liquidator. It's a hardware wholesaler. Weekly chart. Last year it formed the first stage base and went up. Now it formed the second stage base. And last week it broke out. Look at the daily chart. Daily chart show the breakout from a cup with a handle. The pivotal buy point is 57.34. It is still within the buy range. The fundamental is not perfect. There's some red flags here. Michael Kors weekly chart. The breakout pivotal point is 58.72. This is a weekly chart. The previous was daily chart. And looks the IPO last year, and IPO in 2011, and form a base and then form another base. And the fundamental is very strong, mostly a green light. Let's look at the daily chart. The daily chart show the breakout pivotal point is 58.72. Like to share with you how to handle earnings. There's no reliable technical indicator that will tell us how the market will react to the earnings. It is not about the numbers of the earning report. It's about how market will react to it. So before the earning report, there's no reliable indicator, and the chart reading can prove to be wrong. Right after earning, you can see a big gap, either down or up. So if you hold the stocks to the earning report, you may win big or you may lose big. How should we handle it? I usually just replace the stock with option to control the risk. I would just sell the stock and buy a little bit of the option. That's the maximum money I want to risk. A few $100s, $1,000. That's the maximum I want to risk. So if I make it, I make it. If I don't make it, I will lose whatever I used to buy the option. Well, that's all for this week. See you next week.